Unless you've been hiding under a rock this year, you've probably noticed that stocks have basically gone vertical so far in 2019. And even though some people said that stocks were oversold in December of last year, myself including, I think even the strongest of bulls are probably surprised by how severe the rally has been. Not so much in terms of the duration, but how sharp the rally has been. And so here we are basically at fresh all-time highs in the S&P 500. It's not so in many other indices, might you note, Russell 2000, New York Stock Exchange Composite. But the S&P is, and so the question is, can we go to 3,100, which is about a 5 or 6% higher from here? Even if we do, I would think that neither fundamentally, structurally, and also not technically is it feasible for us to stay up there. So let me just kind of shed a little bit of light on this so you have a bit of an idea of what we're talking about. This is a very simple weekly chart of the S&P 500, and meaning that each one of these little bars is 1 week of time frame. And I'm going to make it so that you can actually see the price axis on the right hand side here. But you can see that for the most part, there definitely is plenty of resistance anywhere around 2880 up to about 2950 or so, which is roughly speaking where we are now in the S&P 500. So anywhere from here to here, so 3 times an hour up here. The question is, does the market really have what it takes to shoot to 3100? I think it's possible if we get a US-China trade deal that we get a pop up there. But even if we do, the structural issues remain in terms of the market. A lot of this is driven by some very big, heavy cap names. Number 2, fundamentally speaking, numbers aren't really getting any better. People are beating their earnings, but that's because they've taken out their numbers before. And thirdly, from a technical perspective, that's really what this chart shows you, is that we've had rallies. For example, if you take the rally in 2018 up to the highs, I mean, that was nowhere near as steep as the one we just had. So, I mean, the market really is very, very stretched, and more importantly, some of the most important parts of the market, like the NASDAQ 100 and semiconductor stocks, are extremely overbought. So that's not to say that we can't pick up the slack in things like financials, and maybe even in energy, although energy is no longer as big of a market weight as it was. But you really need to see a real acceleration of a lot of the large, heavy cap names, heavily capped, like mega cap sort of technology stocks. And it's possible they squeeze a little bit higher, but there too, I think basically the math probably doesn't support a sustainable move up to 3,100. So to me, if anything, this is an opportunity for people who are long the market to take profits. If you're more aggressive, one could probably play this on the short side. Again, it's possible to see a squeeze higher on the back of a US-China trade deal. I think a lot of that goodness has been baked in. But again, to answer the question, can we have a move towards 3,100 in the S&P? Again, from a squeeze perspective, it's possible, but structurally, fundamentally, and technically, a lasting move up here to me seems very, very unlikely. Even if we do, I would suspect we can mean revert lower and ultimately probably back into the thick of what has really been a price, a trading range from early 2018 through really the current time. So there you have it. Take it for what it's worth. I'll talk to you soon.